Well, let's bring Doug Kass in. Doug's more in line with Joe Lavorgna, or Joe's a bull on the stock market. Dougie's a bear, but Doug's going to talk about the lousy economy. All right, Doug, let's start. Housing, we got a bunch of charts in honor of you and the collapse in housing. The number this week was totally lousy. We'll put the charts up. Doug, give us your take.
I can't see the charts, unfortunately, because I'm in my office.
Well, housing starts, it looks ugly, just really ugly. We'll go to housing permits. Those look really ugly. There's no way around that.
Yeah, I actually sent you a chart today via email, which described the state of the Palm Beach County, Florida housing market. It is absolutely remarkable. Homes for sale have trebled in the last 13 months. And I'm going to tell you a statistic which you're not going to believe. As you know, the national level of months of unsold homes is approximately 7.5 months. In Palm Beach County, it's 39.9 months. Housing is the Achilles heel of the economy.
Can I get some cheap waterfront home? Is that what you're telling me? Is it a buyer's market? You know, we broadcasters are very underpaid, but are you saying to me I can actually afford Palm Beach housing now?
I think you should take a trip down here and be very happy to show you around. You better be nice to me, because I'm a short seller and we're rapidly becoming an endangered species like a dodo bird. I think in terms of your deflationary scenario, the problem is corporate profit margins. You know, sentiment is momentum is a very fickle mistress. You know, Dancing in the Stars, Emmett Smith won on Wednesday night, but Mario Lopez was a much better dancer. It's just that sentiment, the people that voted, and the people that voted on the show and the people voting in the marketplace are now voting because stocks are going up, and this has a way of changing quite rapidly. We're at the highest level of profitability, profit margins, pre-tax versus nominal GDP, since 1953,
so
when GDP declines.
But Dougie, basically you're saying, okay, the stock market can't last because housing's dragging the economy down and profits are going to go with it. I'm having trouble connecting the dotted line between the housing slump, which I fully acknowledge, and the profits. That's the part. I mean, profits will slow.
Well, it's also happening in retail.
Profits slowing, but interest rates are coming down, and stock market is discounting all that. Slower profits don't matter as long as interest rates are steady or lower.
Yeah, but the problem is when GDP declines and corporate profit margins decline, as has happened 8 times since 1950, the average profitability goes from a gain of 20% year over year to a decline of 8%, with the worst being a decline of 18% in 1954 and the best being an increase of 11% in 1998.
Well, all right,
I think there's a huge overstatement as to the future for corporate profits.
All right, I appreciate that.
And this is really the cornerstone of my bear argument.
All right, I appreciate that. But Mike Darda, the data were sloppy this week. We're going to run a bunch of pictures. Retail sales are slowing. Industrial production, actually, on a 3-month basis, have come to zero growth in the last couple of months. And, of course, the housing starts and permits were an absolute disaster. I'm the first guy. But, Mr. Darda, on the other hand, probably the strongest data we got, and this is important, is employment. When we look at the payroll survey or the adjusted household survey, and we got a picture of that, they're both pointing up. Unemployment is down. Unemployment claims are down. And here's one for you, Michael Darda. Real weekly earnings in October up 3.2%, 12-month change. I think that's the strongest they've been. So how bad can it actually be?
Well, I think that's the key issue, Larry. We're 1 full year or more into a housing recession, and there's been no upward pressure, zero on initial jobless claims. Claims have to spike relative to the civilian labor force if we're going to see the unemployment rate rise. In fact, it's been falling. Wages have been going up, labor incomes rising, broad measures of compensation moving up quickly. That will sustain consumption even if the so-called savings rate moves up.
So what's Joe Lavorgna missing?
Don't you, Larry,
I want Michael Darda to tell me, what is Joe? Joe Lavorgna is basically teetering on the very edge of a recession call. He's kind of like about 2.5 meters behind Nouriel Roubini, which ain't much in this.
3, Larry, 3.
3 meters. Okay, thank you for that. So, Mike Darda, what is Joe Lavorgna missing? Now, both of you guys are missing the Kudlow deflation point. Well, inflation is going to shrink in Q4. But putting that aside, in terms of the economy, what is Lavorgna missing, Mike Darda?
Larry, I'll answer both questions. One is, I think if we really had a deflation threat, emerging markets would be getting slaughtered, credit spreads would be widening out, non-energy commodities would be slumping. None of that's happening.
Sometimes deflation is very positive, particularly when it's oil-based.
Well, and
that's what this is all about.
With oil is one commodity that's deflating. It's taking pressure off headline CPI, so there I agree with you. But I think where I disagree is these sensitive financial indicators are saying that we're probably looking at a pickup. If it's not the fourth quarter, then probably early 2007.
Well, so is the stock market. Joe Lavorgna, would you answer Mr. Darda? He says you're ignoring the financial indicators that are predicting better growth.
The financial indicators, Larry, are very friendly, but the slowdown is not coming because there's a lack of liquidity on the supply side. It's on the demand side from the household. Retail sales numbers were terrible this week, and employment's a lagging indicator. It didn't turn down in the last recession until we were already in it.
So how come retail, the RLX retail stocks are booming? We're going to have Dana Telsey to talk about this in a minute. Maybe you can debate Dana, because that stock index is looking so good. I want to get Doug Kass in on that too. But hang on a second, we got to take a break. Coming up on the program, what's the year-end outlook for bond rates? Remember, folks, when we talk bond rates, we're talking mortgage rates and we're talking discount rates for future stock market earnings. So bonds are very important. Plus, the hottest, most expected, and sexiest stock market rally has been the S&P 500 Retail Index, the RLX, which since July 14th has rallied an incredible 20%, more than virtually any living human being would have expected. Can it continue? We're going to talk to one of the best analysts in the business. And finally, folks, your money, your vote. We're back. Only 718 days in the countdown to the presidential election in 2008. We're going to look at McCain versus Giuliani and Hillary versus Obama. Plenty to do tonight. A huge show. Kudlow and Company. Stay with us.
Last week, the vice president said, regardless of the outcome, the administration would go full speed ahead in the same direction. Well, I think that the American people have said, not so fast.